is worse than watching the stock of a good company, a company that you think is cheap, get repeatedly crushed day after day after day, even if the fundamentals are good and improving? I'd rather be stretched out on the rack and overlook Paul Newman movie. Or maybe bamboo shoots under the fingernails. That's always a lot less painful than this. This is what happened to a stock I own for my ActionAlertsPlus.com, my charitable trust. It's called Quanta Services, PWR. It's a company that's at the center of our wind thesis. It builds transmission lines for energy, cable, natural gas, telco, and also does hurricane cleanup. I mean, that's one of the reasons why the fundamentals are better than I thought. You think that with the devastation caused by Hurricane Ike, along with the extension of tax credits for wind power in the renewable energy zones in Texas, $5 billion opportunity company for Quanta, this one would actually be going higher. But nothing could be further from the truth. Quanta's down big time from the last time I recommended it, July 15th. And it was the top of the commodity market that day, at $29. And now the stock's trading at $18.71. That is a massive decline, for which I will spend tonight and tomorrow atoning for, among many other sins. Quanta and many others like it that look cheap are getting killed for one reason: tainted love. Oh, we didn't load tainted love. All right, tainted love of hedge funds. Quanta was heavily owned by hedge funds because it was a theme stock that fit their big alternative energy bet. But with oil and natural gas prices down, the hedge funds have gotten annihilated. Now these hedge funds are getting calls from their clients saying, send me my money back, send me my money back. Since the funds can't send back the stocks they own, they have to liquidate the stocks, what they can, and they've done it in spades with Quanta. The stock is a huge victim of hedge funds that have been forced to sell. A hedge fund puked up a huge piece of Quanta yesterday, 3.8 million shares. You can't offload that much stock without crushing the price. What a barf job. I mean, this was a professional stock chow blow. I didn't take the hedge fund factor into account when I bought Quanta for the charitable trust, something I regret more and more every day, even as I believe the fundamentals have vastly improved since I purchased it. Quanta Services looks cheap right now, but it won't be a buying opportunity until the hedge funds are done unwinding their positions. But I like the story here so much, I am not backing away. I want to buy more of it. But first I want to talk to John Colson, the CEO of Quanta Services, about how his company's really doing. Mr. Colson, welcome to Mad Money.
Well, thank you. Good afternoon.
Mr. Colson, your company is one of the few in the last 3 months that I think has actually gotten more business and doing better. Is that a correct view, sir, of your prospects?
Yes, sir. We've been very busy the last 3 months, and prospects still look good despite the credit markets.
Can you tell me what happens in a hurricane area when that's covered by Quanta?
Yes, our customers in the areas affected by hurricanes have massive electrical outages. And we come in and assist our customers in restoring service to their customers.
A lot of people worried about companies being paid. Do you get paid for that work, sir?
Absolutely. It's done on typically a cost-plus basis, as there's no way of telling how much work you're going to have to do or how long you're going to be there.
In the last month, we've seen the Congress decide to extend the wind tax credits. How are you affected by that?
Well, that's good news for our customers in the wind farm business. We build the transmission lines to bring the power from the wind farms into the metropolitan service territories, but we also build the switch yards and substations required, and we also do gathering lines inside the generating farms, and sometimes we do the entire farm.
All right, so when Texas does a $5 billion wind package, are you in there fighting for your fair share of business?
Yes, sir, we are. And as the largest T&D contractor in the world, we'll get our fair share of the Texas wind farm business.
People are worried that utilities are going to cut back on infrastructure projects. Are you seeing any cutbacks, sir, in your utility infrastructure?
No, of course, we've been talking to our customers. We're concerned as everyone else is. And so far, we haven't had any customers back away from their spending plans on their major CapEx projects. We think that it may affect some distribution spending and so forth, but their major transmission projects are going forward.
A lot of people are telling me that oil's going from 147 to the 80s, and therefore a lot of wind projects are being canceled. Are you seeing many cancellations of wind projects?
No, we haven't. The utilities that are building wind projects are probably going to be fairly easy to get credit for or to raise debt for those farms. There might be some people in the private side that have a difficult time raising the cash to build the wind farms. But really, the price of oil doesn't have a lot to do with it, because remember, what we're building these wind farms for is renewable energy and to reduce our carbon footprint. And they require tax credits, which we got passed the other day, and they also require a little higher tariffs because they're green energy. So it really doesn't depend on the price of oil to build or not to build these projects.
Now, when you talk about I would need to know about time frame. What's the timing of all these wind projects? Are they enough to be able to build? And I build models of earnings. If I look at 2010, 2011, am I going to start seeing some revenue from wind?
Absolutely. You should see revenue from wind this year. We expect about $150 million revenue from renewables this year, double that next year, and then improving even after that. Would there be even more business under President Obama presidency? It's hard to say. Both candidates talk a lot about renewable energy, and of course wind and solar are the two prime sources, and so both of them are talking about it. It's hard to tell which one will really pull the trigger. Good solar business, don't you? We're building a solar business. There hasn't really been enough work in the solar field to build a good business, but it looks like there's going to be more and more solar, and we're building that business now. Would you ever think about having a dividend, or is it, you're such a growth company that that's not really the plan? That's really not the plan. Obviously, we're in a great financial position. We have a lot of cash on our balance sheet, but we're looking forward to some of these large projects requiring working capital. And we also have been very acquisitive, and so acquisitions are also in our future. And then after that, we would look at either stock repurchase or dividends. One last question. Yes. I used to be a hedge fund manager. I know that when I was in trouble, as I was in 1998, detailed quite aggressively in Confessions of a Street Addict, that I had to toss out some stocks and really cause some problems. Were you aware of that 4 million share block that traded yesterday? Yes, I saw that go across the board. Do you believe that was some hedge fund that just had to get out? Pretty sure it was, yes. Yeah, me too. Okay, thank you so much, Mr. Colson, Chairman and CEO of Quanta Services.